Just a moment, and I'll have the charts showing up on the screen. Let's go over here. Okay. There we go. You should be able to see. Okay, here we go. All right, so we've got the euro dollar on the page on the. All right, another moment here. Sorry about that. All right, a little bit of a lag time while the charts load up here on the screen. Okay, so I'm going to start off with the pound dollar. When it loads up. I apologize for the technical trouble here. I'm sorry. There we go. Okay. So what I want to talk about today, and I get this question quite a bit, it's regarding the trade copier. So if you consider using a trade copier, another service, usually, and I'm not saying all of them are like this, but usually they're automated trading systems. And one of the questions that I get on a pretty regular basis is, they'll ask me questions because they assume that my trade copier and my program is automated, but it's not. It is me executing a trade each and every single time, confirming the signals, and the trade copier just duplicates my behavior. So when I execute a trade in my MT4 account, the trade copier will duplicate the same trade into your MT4 account. So today, the question was, how many trades have I had? What am I doing with, how am I trading? How are they working out? How are the trades working out? I don't have any trades over the last few hours. When I answer questions about my trade copier, one of the first things I say is that I'm very patient and I wait for confirmation. And again, if a new subscriber assumes that my trade copier is like most of the others out there, they're thinking, well, what does that mean? Like, why isn't it just executing trades by itself? Again, my trade copier does not execute trades by itself. It's me who confirms the trade first. I execute the trade based on my trading system. I developed my trading system back in 2001. I've used the same trading system ever since, almost 19 years now. So I'm very experienced when it comes to analyzing and confirming a technical trade, especially on a day like today, where there isn't really any significant news that would have an impact on price. And basically what we're doing is just trading off the technicals. So about an hour and a half, maybe 2 hours ago, I had this bullish engulfing candle here on the pound dollar. This is a 30-minute chart. So if you'll notice these indicators that I'm using, these are the indicators that I use to help me confirm tops and bottoms and reversals. It's not that the indicators themselves give me 100% confirmation and then I immediately just fire off a trade. That's not how I do it. I wait for more confirmation. So let me walk you through this process, and it'll give you a good idea of what it is that I'm doing, so that way, if you decide to use my trade copier, you know how I'm trading. You know that, number one, I'm very patient. Number two, I've got the experience to analyze and to determine whether a trade's going to work. So I'm going to give you a few ideas and concepts that I'm looking at as I'm watching price develop and turn into some trade opportunities or signals. But then at that point, just because I have a signal doesn't necessarily mean I've got to jump into the trade and take it. I then still need more confirmation. I need to be looking at price structure. So here on the pound dollar, overall, if I tighten up the charts, we can see this price swing low. We were dealing with this last week at the 1.2846 area. So that is one clean price swing for the most part, from that low all the way up here to this high. And right now we're stuck in about the middle of that range. Me personally, I would rather trade, and this is the way I usually do it, unless it's off of some kind of a technical support level, I would rather trade a reversal off of a significant resistance or a significant support level relative to the time frame that I'm looking at. Sometimes I can step back and I can see a 4-hour day, a 4-hour high or low, or a daily high or low, something like that you can't necessarily see on a 30-minute chart. So it's very important that you step back and take a look at the bigger picture. At least that's the way that I do it. That's what helps improve the number of winning trades versus the number of losing trades that I experience. So I'm very, very patient the entire time that I'm watching price during the London and New York session. If I get a signal, I'm trying to determine if I take this trade, is it likely to reach any of the expected take profit levels that I normally trade to? If it's not, if there's not enough volume and not enough momentum, and it's a slow trading day, the price structure is small, the trading range is relatively small, then I'm just going to stay away from it. There's no reason for me to get into a trade, use my capital, and then use your capital if you're using the trade copier, and then have the trade go sideways for 18, 19 hours. There's no reason to do it. We don't know what's going to happen. And the longer we stay in a market like this, where it's susceptible to tweets about Brexit, comments about trade wars, China, tariffs, whatever it is, the longer we stay in the market, the more likely it is to be, the more likely that trade is to have, to react to it. We've seen these spikes back in the summertime. Angela Merkel made a comment, created a spike, 30, 35 pip in the opposite direction. Could have easily stopped out some people if they were using a relatively tight trade stop in a relatively tight trading range. Again, it all comes down to the price structure. So the fact that I get a bullish Tech One trade, or this is a Tech One trade, I'm sorry for those of you who aren't too familiar with my trading system. I developed a trading technique back in 2001 called the Tech One trade. Basically, it's a candle pattern, but I'm using certain indicators to confirm that it's likely to move in the opposite direction. It's likely to bounce. So this morning, about an hour and a half ago, this morning, I'm in California. So I'm 3 hours behind New York time for those of you who want to zero in on exactly, the time frame that I'm talking about when I talk about morning, noon, or night. So price was trading and bouncing off of the psychological level, the 1.2900. It is a very important and a very critical level in some cases, and in some cases the market will react to it. And this morning it did react to it. But my trading system isn't where I see price go through a technical level and then immediately buy the opposite direction. Some people trade it that way. I do not. I wait for more confirmation. I'm all about confirmation. I'm very patient. I'll wait as long as it takes to get the picture perfect setup. I mention that and I say that all the time. Picture perfect means to me that everything needs to be lining up together at the right location at the right time. I need to get a good solid technical trade off of a solid support or resistance level if I'm going to trade a bounce. All these indicators need to confirm. The Bollinger Bands and the way the candle patterns react around the Bollinger Bands also have a very significant impact on whether or not I decide to take this trade or not. If you watch some of my videos on the reversals, you'll see how I'm using the Bollinger Bands to determine that it's a reversal that would that's likely to work and it's likely to pay off. This wasn't one of those scenarios. It wasn't one of those setups. I saw the bullish engulfing candle. The indicators here were confirming. I use bandwidth and percent B when I'm trading and using the Bollinger Bands. They're very important to me. I need to have them on my charts. I'm also using CCI and looking for the divergence on another chart. 30-minute time frame, I'm comfortable with that. So if you're going to use my trade copier, be aware that I use the 30-minute and the 1 hour chart for day trading. I don't go down to a 5-minute or a 15-minute chart. I used to, but I don't. I haven't for many, many years. I did in the beginning of my trading career when I was scalping and looking for really fast short-term opportunities. But the fact that I use the 30-minute and the 1 hour chart for day trading, when I get the picture perfect confirmed trade, the market is reacting. There's enough volume. There's enough participation. I'm going to earn 30, 40, maybe even 60 pips on some of these reversal trades. I would much rather wait for an opportunity like that and earn profits like that and do that maybe 1, 2, 3, 4, 5 times a week, as opposed to having 12 to 20 scalping trades throughout the week where I'm making some money, giving some money back, making some money, giving some money back. I did that in the beginning of my trading career. There's no reason to do that. There's no reason for us to scalp, well, at least if you're going to use my trade copier. Now, I'm not saying that there's anything wrong with scalping. I did it. There are some really great traders out there that have wonderful trading systems around scalping. I just don't do it that way. I would much rather close the month, a whole 30-day block of time, 20 trading days minus, bank holidays. I'd much rather do that and have fewer trades, but still earn 500 to 1,000 pips at the end of the month. I'm going to earn more money. I'm going to have fewer losing trades. It's going to be easier, less stress. And almost every one of my trades is going to be a winning trade by waiting for these right opportunities, these choice opportunities. When I got this bullish engulfing candle, I realized that it was a possibility. It was trading off of a major psychological level, but it's still stuck in the middle of this range right here. I go back to this range. This is my consolidation range on the 1 hour chart. It could have worked. But again, I mentioned that I'm all about confirmation. And I waited for price to take out the high of that signal candle by a few pips. But I still wasn't comfortable because this was in a downtrend and I wanted to wait a little bit longer before executing the trade. Now, if this would have been an automated system, it probably would have fired off a trade and then I would have, the trade would have been stopped out. The system would have had to close it out. But by using a trade copier like mine, which is not a black box system, it's me executing the trade and then confirming. I'm validating each one of these trades. I need to step back and look at the price structure. Number one. Number two, what kind of trading day are we trading? Is there economic data? Is there enough volume? Is there enough participation? What time of day is the trade setting up? All of these things have a critical impact on trades. And a black box automated trade copier system or a robot, it doesn't take into consideration all of these different components that validate a trade. The only way you're going to know about these components is by gaining experience. I've been trading for approximately 19 years. And this is all I do. I do this every day. I use these same time frames. I use these same trades, these same techniques, the same indicators. Everything is the same. I just wait for these picture perfect trade opportunities, wait for confirmation, and then execute when I know I have a winner, when I know beyond a shadow of a doubt that that is my trade. If there's any suspicion in a trade, if I think to myself, it might work and it might not work. That thought right there, that ran through my mind so many times in the beginning of my trading career. Back in 2001, I created a journal, a written journal and a video journal. I put a video camera on a tripod with a microphone and I pointed it at my screen in 2001 and I started recording my thoughts and my trades. And I remember writing it down and those words, it looks like it will work. And then again, it looks like it might not work. Every time I did that, or I thought that, and I executed a trade, almost every single time it was a loser trade. And I would look back and I would think to myself, well, you knew that there was a possibility that it was going to fail. Why did you even bother with it? These were the thoughts that I had. I don't do that anymore. There's no reason to trade like that. If I have any doubt in the trade, if I think that it might work and it might not, that's it. Hands off the mouse. I'm done. I'm not going to look at the trade. I'm not going to execute the trade. I don't want a losing trade. And I don't want you to experience a losing trade if you're going to use my trade copier. I want every one of my trades to be a winning trade. I know I'm going to have a losing trade on occasion. There's nothing I can do about that. But the fact that I control my behavior and I wait for these picture perfect opportunities means that I'm going to have a higher number of winning trades, fewer losing trades. And if I experience a losing trade, the next trade's probably going to give me the opportunity to earn back the loss right away. That's how quick I can earn back losses. And I would rather repeat that behavior every week, every month, every year. That's what has kept me in this game for almost 19 years now. If I would not have behaved that way and controlled my thoughts and my behavior and my execution, I wouldn't be able to provide any money to take care of my family, to continue to trade. I would have blown up trading accounts. You've got to wait for these picture perfect opportunities. And if you're going to use my trade copier, I think that you need to know my trade philosophy, my psychology behind each one of these trades, my skill, my ability, my experience. This is something that I learned the hard way. It wasn't easy to be able to think and act and perform this way in the beginning. I was desperate. I was losing a lot of money. I was taking every single trade. I kept thinking, well, what if it does work? What if it doesn't work? I got to try something. All of these panicked thoughts were going through my head all day long, all night long. It was a mess. It was a nightmare. It doesn't need to be that way. You will always get your trade set up depending on what it is. You'll always get that picture perfect trade setup. It's just that you have to wait for it. You have to have the patience and the time. You have to, like the awareness, the overall general awareness, knowing that you may be down a lot of money. You may have a lot of bills at the end of the month that you need to pay, but you're not going to get it done and it's not going to happen. And you're not going to have that money if you trade erratically and if you trade with this gambling mentality where, again, going back to the thoughts, maybe it'll work, maybe it won't work. That's gambling, in my opinion. If I took that trade, that's a risky trade. I don't know what the outcome's going to be like. I can have an idea, but I can't control it. Too many things are going to go wrong. If things don't go right, I immediately close out the trade and it ends up being a loser trade anyway. There's all kinds of things that can change. By performing this way, by duplicating my behavior, it allows me to improve on my trading system, improve on my mindset and my execution, because I do the same thing over and over again every single day. So again, this was a trade. It looked like a bullish engulfing buy opportunity. It did bounce off of that psychological level. Again, for some scalpers, they probably made some money here. It rolled up to about the 20. So there was about, minus the spread, maybe 20, 18, 17, 12 pips, whatever it is that you do. I don't know. So I used to do this. When it would tag, the psychological level, I would immediately buy the opposite direction or sell it the opposite direction, depending on where it was going. And it worked sometimes, and sometimes it didn't. And I realized that by waiting for these picture perfect Tech 1 trades and all the confirmation that needs to come together at the same time, I'm going to get a better opportunity to earn 30, 40, 50, 60 pips on some of these trades when they work out. When they work out, I trade them to psychological levels. I use psychological levels like the 20, the 50, the 80, and the 00. Those are the psychological levels that I trade to. If I was going to take this trade here at the 20, the next psychological level target would be the 50. If at that point, when I get the signal, if it doesn't look like there's enough momentum and volume where I expect price is going to reach that 50, I'm not going to take the trade. I'll wait. I waited for the next candle. It really didn't go up any higher. It rolled right back down and retested that level. And at that point, I've watched it every candle since on the 30-minute chart. And it's basically trading inside of that 30-minute candle, that 30-minute trading range. That right there in itself indicates something about the market conditions right now on the pound dollar. So it tells me stay away, wait for a better opportunity. So again, I don't know if it's going to bounce and then go back up again. I do have some price alerts just in case, but it is in a short-term downtrend here. And I'm still dealing with this support low here at the 28.46, 28.45 area. It may continue to trail all the way down to that level and then bounce. And if it does that and it doesn't give me an opportunity to sell it again later on, I'm happy trading off of significant support or resistance. That's where I'm going to get a better opportunity. That's where the rest of the market is likely to trade it. And when and if it does actually fall down here to this support level and bounce, if it does that, perhaps it would happen with some economic data, maybe something to do with Brexit. You'll notice that a lot of times with prepared statements throughout the week, they generally drop them, or very often, I shouldn't say generally, but very often they'll drop those reports and these statements at key support and resistance levels, and the market will react to it. It helps them protect or defend certain levels. We saw that happen with the pound dollar during the late summer when price dropped through the 2000 level. And then shortly after that, there was like this wave of comments about Brexit, and it was all pound positive. And they were able to defend that 2000 level on the pound dollar without having to intervene monetarily, just because of these statements that they kept hitting the markets with for 3.5 weeks. Price rallied and they defended that 2000 level. There's the ability to create some, and I don't mean manipulation, but to a certain degree, manipulate the market and the price based on how the market's going to react to it, traders, how they're going to react to it, to certain key support and resistance levels. Banks have these levels in mind. I remember my first experience was back in 2001, 2002. I was trading. I was totally oblivious to bank intervention. I was trading the dollar yen. The Bank of Japan was intervening a lot at that time for a few years, right around that time. And it was a new eye-opening experience. I'd never experienced anything like that. But I watched how not only was the bank able to intervene and defend certain levels from by stepping in themselves, or the comments, statements, and rumors that are also dropped in at certain levels that will create a market reaction. And that by itself is enough. Sometimes it doesn't hold. We've seen even when Trichet was in office, they did it. They would drop these comments to defend certain levels. There were key levels that the market was waiting and watching. So were some of the banks. They were very open about it, and they would defend these levels, not necessarily by stepping in where the bank had to step in, but just by dropping these comments and statements. So that's something else that we could watch. We can try to identify some of these key resistance and support levels on the 1 hour time frame, the 4 hour chart, the daily chart, and then pay attention to how the market's reacting today. Obviously, again, as I mentioned, I'm not really seeing much of that happen today as far as these comments or these prepared statements. So it might hold, but I'm thinking it may end up making another move lower. I'm going to have to wait until after the rollover, 5 o'clock New York time. And then I'll be looking for possible HL30s to trade during the Asian session. I don't know if I'm going to get any HL30s. It really depends. It depends on the price structure, where price settles and where it closes and opens right after the rollover. But it is something that I'll be watching and keeping an eye out for. So again, back to the trade copier. If you're going to use it, remember, it's me executing these trades. Every one of these trades I execute in my own MT4 account, and the trade copier just duplicates the behavior. Everything that I do, if I make any adjustments to the trade, it will adjust in your MT4 account. If I set in a stop loss or take profit level, or if I change it, the trade copier instantly does the same thing in your MT4 account. You control the lot sizing. So if I, let's say, execute a standard lot, if you don't want it to execute a standard lot, you can set it to a micro or a mini, and that's all that it will execute. You control the lot sizing and the leverage. It's a great trade copier. It's fast, it's instant, and it works really well. All of my trade copier subscribers really like it, and it's produced really good results. So that's it for this update. I'll try to post another update after the 5 o'clock rollover. I'll drop it in the membership area, and then I will be back here live just about the same time tomorrow. Thanks for watching.